What's good, everybody? Welcome back to episode 2 of the mini boot camp I'm doing here on YouTube. This is obviously just an insight for you guys that are beginners or just want to refine their skill set. In many ways, I'm going to go through the charts in this boot camp. So this is episode 2. This is basically just market structure, okay? So last episode, briefly, I touched on bias. Obviously, we touched on candlesticks going up and coming down, bullish and bearish. But today, I'm going to go through what bullish and bearish trends are. Okay. So just to dive in quickly. Here, I've got an example of a bullish trend. Okay. So what do I mean by that? A bullish trend is full of lower highs. Higher lows, higher highs and higher lows. Okay, so what I mean by that is this higher low is higher than this low. Okay, so it's creating new higher lows. This high is higher than this high, so this is a new higher high. So it's all based on higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Okay, so that is a bullish trend. So this is the market moving upwards. Pretty much in a nutshell, you can't really get as simple as that. Okay, I've also got a bearish example, which would be here. So as you can see, we're creating new lower lows, new lower highs, because this high is lower than the previous high. This low is lower than the previous low, so it's a new low that's being created in the market, moving downwards. So it's full of lower highs, lower lows, lower high, lower low, lower high, lower low, lower high. And obviously you can see another lower low here, okay? And a new lower high. So this is what a bearish trend is, okay? So bearish is moving downwards and bullish is moving upwards, okay? Simple. With this, we use this in our technicals and our analysis for our trades. There's two things I want to go through as well. So there is something called a break of structure, and there is something called a market structure shift. So I'm going to be introducing these technicals, okay? And I'll be doing a couple more towards the end of this video. So these are primarily some of the most basic things that you can spot in trading, but for our strategy that we use inside the academy, these things are essential for us to enter a trade. Okay, so break of structure pretty much is just following the continuation. So here is a break of structure because we've broken the previous lower low in this downward trend, this bearish trend. It's a break of structure, okay? Again, here we've broke this low to continue lower and continue our trend. So this is a break of structure, okay? Next, this low here that I've marked out, this new low that we said before, is a break of structure. So this is a continuation of the trend, okay? Pretty much it's just breaking its previous leg, which is called a break of structure. It's breaking it and continuing down in the trend, okay? Now, a market structure shift. Very, very important in our trading, okay? Please note that a break of structure always has to happen before a market structure shift occurs. Prime example, here, this low, guys should know this by now, break of structure, okay? We're continuing the trend down, created this new low, which is here, okay? Broke structure, continuing down. But we've also had a new lower high here, okay, in this bearish trend. But as you can see, price has now broken this. This is called a market structure shift. So now this trend is changing because it's broken the last lower high to now make new highs, okay? Which would be called a higher high because it's higher than the previous high, okay? So now we can expect a move up So here we're obviously creating a new high here, and then a higher low, which is here, because it's higher than this previous low. And we would just be creating this until, obviously, you can see all the 5-minute candles here. We're literally creating loads of higher highs and higher lows as we speak. So this is what a market structure shift is in a nutshell, and obviously you'll see it within our strategy breakdown towards the end of the boot camp. Okay, so this basically breaker structure into a market structure shift is a premium example of what we call like a plus like piece of analysis for our strategy and trading the way we trade inside the academy. Okay, so it always has to break structure and then has to show a market structure shift afterwards, which is breaking the previous high. Okay, it's literally just cancelled out the trend that we're following, which is which is obviously a bearish trend. We've come down, we've made this last lower low, and we've beat the previous last lower high to make a new higher high, okay, because it's higher than this high. Does that make sense? From here we obviously continue the trend up. Okay, so these two technicals you see on your screen are so important to learn and master. If you've obviously got time on the charts to just go and practice, I'd literally go on TradingView, pop up Euro USD or GBP USD, try and spot as many breaker structures as you can, spot when the market is going to shift in structure, breaking that previous leg, that previous high or low, depending on the trend that you're doing. But yeah, these two are very, very important, and that is pretty much what market structure is in a nutshell. We've had a bearish trend here. We've obviously kept breaking structure to the downside, and we've finally had that market structure shift on the way up. Okay, which now obviously in this case is a short-lived bullish trend, as we go into kind of like a stagnant piece of price action here. So another thing I wanted to touch on very quickly is accumulation, manipulation, and distribution. Okay, you see this all the time in the charts, and this is why we primarily use sessions as an example. So let me just try and spot where this happens. We have a good example actually right here. So as you can see, price, let me just delete all these here, we don't need these here anymore. There's 3 sessions we trade off in our strategy, and that is as shown here: Asia, London and New York. Okay, this exactly is what we're kind of looking for. Sometimes we want to see the big push happen in London, but more often than not, New York is where it takes place. But primarily, we're going to be trading the London session to trade off Asia liquidity. But this is just a quick example. So this here is what we call accumulation. Okay, pretty much what this is just an accumulation of orders and banks getting ready to move the market. Like I said, and I touched on in the previous video, you do not want to be trading during this kind of market structure and price action, okay? Because it's not giving you any kind of entries, it's just moving sideways. So this is what we call accumulation, okay? After accumulation, price is usually going to go in one way or the other in the market. In this case, London has been the manipulator. It's come down, and then finally, we've manipulated there in London, and then in New York we've had the distribution. Okay, so after a accumulation has happened, we always expect a manipulation to maybe a POI or somewhere. In this case, we've got some imbalance down here, which I will mark out, which I will go through also. Had some imbalance here, and then we've taken off from here to distribute, okay, and continue the trend in which we want to continue after, which is a bullish trend, as you can see, and we marked out before. So AMD, quite simple to understand. Accumulation, manipulation to a certain POI or level of price, which we expect price to take off in the other direction, giving us distribution. Okay, So this is quite simple market structure and price action we can expect every day in the charts pretty much. And this is why our strategy is so strong in terms of trading between these 3 sessions, because this is what we're looking for. Okay, quite simple. Right, cool. I just want to touch on before we finish this video is some other technicals that we use. Okay, so I've got an example here. Euro USD to the dollar. Okay, a fair value gap, if I can draw one out quickly, is 3 candles. Okay, just picture these being the 3 candles. Move it up a tiny bit. We've got 3 candles either going up or down. Okay, and within this drawing I'll show you here. So we've got 3 candles moving upwards. So a fair value gap is literally the space between this candle and this candle. Okay, it leaves an empty space in here. It's a gap. Okay, we can all agree this is a gap, and we can use this for price to come back into these areas of fair value gaps, and we use these as entry points to enter our trades. Okay, so an example of this, if I just delete this very quickly, is here. Okay, so notice on the 15-minute time frame, however, we've had this candle here, we've had this big candle here, and this candle here, and we've kept moving up. Okay, this is called a fair value gap. Okay, this is just liquidity that the market is left behind, maybe in big orders. That's why the big push is up. Price usually has to come down and come round to this area to take back up. In this case, price didn't quite come back down into this area. Maybe on another time frame there was one, but yeah, price usually has to come down into these fair value gaps to move back up. You can use these as entry confluences 95% of the time. A fair value gap is where I'm entering a trade-off. Okay, you can also use these another way. I know I'm moving fast, guys. As an inversion. Okay, obviously we're kind of in a bullish trend recently, so it also adds up to us that we'll be looking for buys primarily. So this fair value gap here would be a good entry model for us to use. Inversion fair value gaps is the same thing. So in this case, we was moving down with these 3 candles. There was a gap in this candle and prices just ran through it. This gives us an extra confluence that price is bullish and not going to respect the fair value gap that price left behind. If I quickly just go in replay mode and I do this, it's left this fair value gap behind, but has evidently just ran through it. Okay, so it's not respected this imbalance or fair value gap, whichever you want to call it, in the market. It's run through and it's going to continue going up. So this is an extra confluence for us to look for buys. Okay, also very quickly, I will touch on this more in the next episodes when we're going down into our strategy, but order blocks as well. Okay, these are pretty much just resistance zones or support zones, where like the last candle that was like moving in the opposite direction was shown. Okay, so here is an order block. Okay, this is the last bearish candle before a bullish move occurred. Price can also tap into these areas and then continue to move up. I was trying to see if I can see any examples of this. So they present themselves quite a lot on multiple different time frames. Let me actually use the 5-minute. We'll actually see a lot more of this going on. So if I can just go on here, this here is the last bullish candle before a bearish move occurs. So this here is an order block. Okay, obviously we're heavily bullish at the moment in price, so I wouldn't expect price to respect this. However, it could respect this order block and then continue and move down instead. Okay, but yeah, that's just four kind of technicals we use, which is obviously the break of structure, market structure shift, an order block, and an imbalance, or a fair value gap, or what you want to call it. So we've been through overall market structure and how that works, implementing our breaker structures into market structure shift, and then just touching on the entry confluences we use of a market structure, a fair value gap on order block. So hopefully that all makes sense. If I was you guys and I'm not kind of used to trading, I'd just go on the charts, use either the 5 minute or the 15 minute. It works on any single time frame, but for the purpose of how we trade and how I trade, just mark up your new lower highs, lower lows, lower highs, lower lows, and identify what the trend's saying. Is it telling you it's bearish, or is it telling you it's bullish? And then from there, try and spot where price kind of shifts in structure, and then forming a new kind of trend. Okay, so that's episode 2 wrapped up, guys. Like I say, I'd appreciate all your support on the videos, likes, comments, and obviously subscribing to the channel. There's going to be more content coming. I believe there's going to be 2 more episodes of this mini boot camp. I understand we're moving fast through kind of everything, but it's all there for you to take in and learn, go away with it and practice yourselves, okay? So, yeah, I'll be back for episode 3 soon. I hope you like the video. Obviously, go and chat on the socials. It will be in the description, and see more of what we're about at Entity Trading. So, yeah, that's all from me. I'll see you next time. Peace.